Coming up on this episode of Trillionaire Mindset, we're talking about the Silicon Valley Bank collapse, Signature Bank collapse, and everything in between.
We're hitting everything. Regulatory problems, where they went wrong. One more thing. Also, Ben gets real weird about China.
Oh yeah, super weird. China? Oh, whoa! And then also...
What was that?
Apes.
Oh! Big news for the apes. You're going to want to stick around. You guys might be in trouble. Or
No,
good
actually,
stuff.
it might be.
We'll find out.
Yeah, we'll find out. Well, you might be a billionaire.
Welcome back to Monkey at the Beat Man. Kramer, when I get done with you. Yeah.
Are you ready for a Trillionaire Mindset?
Fill me up, Arrow. Bitcoin solves this. Bitcoin 100,000.
Hey, everybody. Welcome to the Trillionaire Mindset. Please, real quick, check out the disclaimer so we can get that out of the way. You guys know how bad traffic is in LA. Ben is once again stuck in traffic. I had to get out of the car and walk to the boat. All right, so I'm here alone, but that's fine. We're going to get started. He'll get through the traffic and he'll be here, but we're going to get started without him. And it does pain me because I know he would love this so much. We're going to be talking about the SVB collapse today. We're going to be talking about Signature Bank. So I feel like there's a perfect starting point right here. We got to talk about our boy, Jim Cramer. Let's check this out.
Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB, it's the old Silicon Valley Bank, recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap.
We love our boy Jim Cramer, don't we? He's what the hell was that? Are you guys picking something up in the... Oh, brother.
Kramer! How you doing, brother?
How are you doing, brother?
Oh, you know how I'm doing. I'm so pissed off
Okay.
at my little bald-headed freak, Jim Cramer. I'm out here listening to him talk this shit on MSNBC, and he has no idea what he's saying anymore. You know what I think?
What's that?
Young man.
What's that?
My Greek friend.
Oh, okay.
I think he uses too much shoe shine on that bald head of his, and it clouds his judgment.
That may be
You know, he's up there shining that thing day and night, and it's just seeping into his little piggy brain, making him think all sorts of crazy things that he doesn't fully understand. None of us really do, if I'm going to be honest, if I can be fair about it. But this guy takes it to a whole other level.
I got to agree with you.
So, Kramer, I've got a message for you, young man. Old fart, you fucking piece of shit cocksucker. Please, for the love of God, let me know what stock you recommend next so I can know which one to short into the fucking basement and make a ton of fucking money, okay? Okay, Kramer, how about this? I got a brand new stock recommendation for you. It's a brand new company that I'm starting today, and I want you to be the first investor. It's called Cocksuckers International Ltd. What do you think, Kramer? You gonna invest?
I'm in.
He's in. All right, now, perhaps Kramer may not be dumb. Perhaps he's just unlucky, right?
It could be.
But I heard a rumor that Jim Cramer went long airline stocks the day before 9/11.
Is that true?
I don't know. I don't think so. But, you know, Jim Cramer is so dumb. If I were to start an airline called Jihad Airlines, he'd be first in line to buy a share.
I gotta tell you, you're not gonna. Oh, by the way, do you have a name? Should I call? We've met quite a few times. Yeah.
Oh, you can just call me the guy.
Okay, the guy.
I'm the guy.
Well,
You're pissed off at Jim Cramer.
Well, I gotta tell you, the guy.
What?
You're not gonna be happy about this because there's more.
There's more?
I'd like to show you what he was saying about Signature Bank. as
You
well.
gotta be fucking shitting me.
Just wait.
Let's start with Signature Bank. This is a New York-based commercial bank, but it's got 36 private client offices sprinkled across the New York metro area, California, and North Carolina. The thing about Signature is that it's a business-oriented bank, and to the extent that they have a consumer business, it's focused on the wealthy, namely business owners and senior executives who do a lot of business, and you can make a lot of money working with them.
You're telling me that he recommended Signature Bank also?
That's what I'm
before
trying-
it collapsed?
That's what I'm trying to tell you.
Woo! Wow! Kramer, you're as wrong as you are ugly, man. I'm so mad. I'm so mad. Kramer, you're as wrong as you are ugly. Oh, fucking shit, I'm so mad. Oh, I'm so mad. Oh, Kramer. Now you've done it. Oh, no, here it comes.
Kramer, you've messed up for the last time.
Who's that?
Oh, God.
Who was that guy?
I don't mean to alarm you, brother, but that's just my alter ego, Joshua.
Joshua seemed kind of
Yeah,
like a.
oh!
Kramer, I have got a real bone to pick with you, sir. What you've done is fiscally irresponsible.
Oh, God! Kramer, I swear to God, I'm terrified right now because Joshua, when he gets upset, I gotta keep him under control, and I frankly don't know what to do right now with all of this.
I gotta say, I kind of like Joshua.
Joshua, oh, here he comes again.
Kramer, I respect your career as a broadcaster and as a finance professional, but frankly, your track record as of late speaks to your apparent lack of due diligence and your lack of professionalism.
Oh, God, Joshua, go easy on him, brother. Holy Christ, on the cross. Boy, you know, I better get going before Joshua starts to say something real mean, and then I end up in trouble with the law and the courts and whatnot.
All right.
Kramer, as always, you better watch your back, brother, because I'm coming after you. I'm waiting for you to respond to my challenge to, wrestle me or whatever. But anyway, brother, it's always been good. What's your name again?
Emil.
Email. All right. No, we like that.
So
Okay.
long, the guy.
You look good as hell.
Thanks, pal.
All right. Take care, everybody. Kramer, fuck yourself.
And there he goes. Gone again. Oh, my God.
Holy crap. Sorry about that. Jeez, man.
The traffic clear up?
Yeah, it was, I don't know, it was like a pancake syrup spill or something. I asked
Pancake syrup.
CHP and he told me to move along or he's going to fucking shoot me, so
Jesus
I didn't bother asking anymore.
I got to tell you,
What?
the guy stopped by again.
The guy, oh man, he's the
and
best.
also,
Yeah.
apparently his name is just the guy.
Yeah, I know. You didn't know that?
I didn't know that.
Yeah, he's the guy.
It's funny because he's like this big wrestler persona. Imagine a WWE guy was just like, I'm the guy.
Yeah. Well, sometimes the simplest names are the most memorable ones.
Sure.
Because then you're going and forgetting, and you're like, well, what is he? He's
What
the
is-
guy.
It's the guy.
Yeah. I mean, that's
The
when,
guy from the thing.
Yeah, when we were grabbing drinks, he was telling me
You were
that.
getting drinks with that
Yeah,
guy?
I got
What's he
drinks.
like out at
He's very calm. He,
Yeah.
he talks like this. He's actually kind of nerdy.
That might have been Joshua you were out with.
Oh, well, that might be his real name. I don't know.
Oh, I don't know his deal, man.
He's unstoppable in the ring, I tell you that.
Yeah.
I mean, boy, that guy, you should see in some of these backyard shows. Oh, boy. Wow.
Incredible body on him.
Yeah, wow, I've heard. Rock hard. Makes me rock hard. Well, let's see. We've got the live stream coming. Oh, my throat hurts. That's weird. Probably all that yelling in traffic.
Probably all that syrup.
Yeah, it sticks to my throat. I got out and licked some. We got a live stream next week, March 23rd, only on YouTube, 3 p.m.
On what?
YouTube.
YouTube? Is that their new food-focused?
Tube? Yeah, it is.
Check us out on YouTube.
Well, only on YouTube next week, March 23rd, Thursday at
But
3
also
p.m.
potentially
Pacific.
on TikTok as well.
Yeah, we might be doing it on TikTok.
So when we say only on YouTube?
Yeah, also on TikTok. Maybe. But 3 p.m. Pacific. And hey, guess what, gang? We got stickers.
Yeah, not only can you get the classics, but
This thing's tight. Look at this.
That is
Put one on
tight.
my truck.
but this is the real treat.
Yeah. Read it for the audio listener. What does the sticker say?
It says nothing like phone sexing your brother through a go-between.
And for those of you not in the know, that's a reference to when my brothers and I used to abuse the free AT&T service for the hard of hearing. where you talk to a live operator and we made them say naughty things to each other. I'm so horny. I'm so hot right now. Whatever the fuck we would
Nothing like phone sexing your brother through a go-between. Very sick.
Yeah. So
This should go on the truck.
that should go on the truck. Yeah. I need to put some of Phil's stickers on my truck.
You got to go with a classic.
I heart my shitty life.
I love my shitty life.
I wanted to put my I love my shitty life on the back of my scooter helmet, but then I feel like that's cursing me to crash.
Then you'd really love your shitty life.
Yeah. Ay. Well, we got a real doozy of an episode for you today. Holy God.
Do we?
Yeah, we got a lot to cover.
Yeah, it all happened right after we recorded our episode last week.
Yeah, it all happened so quickly.
And then I was in the desert getting texts from people going, like in the morning going, oh, I bet this episode's going to be crazy.
Yeah.
And I was like, brother,
Yeah.
it's not going to be that crazy.
I know.
I just finished playing tennis.
Yeah. I didn't get any of those. I got like one text and I just said, yeah, we're going to cover it next week, which is actually a pretty good thing because then we end up having more time for the story to shake out.
You don't have any Trilly Peppers texting you?
Oh, I like that. It's really
That's actually shout out to my friend Matt. He came up with that. He calls himself a Trilly Pepper.
my good friend Kate is a Trilly Pepper. Shout out to Kate.
But did she come up with a cool name?
I don't know. She might have.
'Cause
She'll come up with one. She's a genius. So
well, let us know when she has one. For
yeah,
people.
I'm sure that as soon as this comes out and she hears it, she'll be texting me being like, "Oh, whatever."
Okay, but Red Hot Chili Peppers is already taken.
Red Hot Chili Peppers is pretty good. So
Chili Peppers for short.
right. Hey guys, we want to take a quick break to thank another sponsor of today's episode, Notion. There's been a lot of buzz around AI lately. We talk about it almost every week now. But maybe you're not sure how it fits into your daily life. Notion has just launched a new incredible tool, Notion AI, that's fully integrated into Notion, so it has the context of everything you're already working on. Notion combines your notes and docs into one space that's simple, beautiful, and now more powerful than ever, thanks to AI.
Here's something you might not know, a little peek behind the TMG curtain. We use Notion here at TMG Studios.
Every day.
Every day we're using it, all right? We're using it to organize. We got a lot of stuff going on here. I don't know if you know how crazy it is behind the scenes, but
It's robots all back there.
What is it, 7 or 8 shows now? And it is hard to keep track of everything, all right? So we're using it to organize projects for our podcast. Our executive producer, Ryan, and producer, Zach, are both in there every day taking advantage of Notion AI to assist with day-to-day tasks. It's actually really cool, and, we wouldn't be able to do the show without it, okay? What helps them stay organized helps us get ready for the show.
That's right, Emil. Notion AI helps you work faster, write better, and think bigger, doing tasks that normally take you hours in just seconds. Leverage the power of artificial intelligence right inside Notion across all your notes and docs without the need to jump between your work and a separate AI-powered tool. Just tell Notion AI what to do. The more details, the better. Or you can start a prompt and go from there. Have it write a blog post, make an outline, brainstorm ideas, or summarize a whole bunch of docs.
Use Notion AI to improve writing, summarize pages, find action items, translate into any language, and more. Simply select text, click Ask AI, and increase your productivity like never before. For a limited time, try Notion AI for free when you go to notion.com/Trill. That's all lowercase letters, notion.com/Trill to try out the incredible power of Notion AI today. And when you use our link, you're supporting our show. This is a limited time offer. Try Notion AI for free right now at notion.com/Trill.
Should we get right into it, man?
Nah, let's meander for a bit.
Are you serious?
No.
Oh, okay. Wow. So unless you've been living under a rock, in which case,
Don't do the joke.
Say hi to the bugs for me.
No.
And
No.
what's the rent like under there? Is that the other one that I usually do? I can't even remember. Oh, yeah. So Silicon Valley Bank. Is it Silicon or Silicone?
I don't know because you made fun of me one episode for the way I said it.
Let's do real fast. Google. How do you pronounce silicone?
And then someone commented and said, it's funny, Ben made fun of Emil for the way he said it and then said it incorrectly. So I think neither of us know.
Yeah. Just scroll down. There's going to be an actual Google thing. Oh, there should be. It should be a Google, like, how to pronounce thing.
Eesh, this is embarrassing.
Silicon. Let's see.
The name of this chemical element
Jesus.
Let's break down the pronunciation.
Oh, come on. Just
get
say
to
it.
it.
English pronunciations are similar here. Silicon.
Silicon. That's
Okay,
crazy. I'm not
okay.
saying that. Silicon.
All right, silicon. So
Also, really making a whole
Yeah.
meal out of it.
you have to
Jesus.
pronounce
Let's
the word.
talk about this chemical.
English pronunciation.
Also, how are we getting a French dude telling us how to...
Yeah, no kidding.
Famously, guys with peanut butter stuck to the roofs of their mouth. He's going to tell me how to do it?
Have you ever gotten peanut butter stuck to the roof of your mouth? It is no fun. It can be scary, man. You feel like you're choking. Anyway, so we're going to do a timeline, but a little background first. So Silicon Valley Bank.
Right, a lot's happened since.
So Silicon Valley Bank was the preferred bank for venture capitalists and startups and individuals. Like they did everything from they did mortgages, personal banking. They did.
But a lot of those came with... They were part of a white glove package that you would get
Right.
for banking with them.
Right.
You know, the majority of their... it seemed like their depositors were VC guys, startup guys. You know, if you just got your Series A funding, you're marching your ass down to SVB
And
and parking
depositing
it there.
that check. So their Silicon Valley Bank's balance sheet basically grew from about $60 billion in 2020 to $190 billion in 2022 due to the boom in venture funding from perennially low interest rates, right? And so when you're a bank and you got all that money, you got to wonder, how do banks make their money? Well, one of the ways that they make their money is they've got all this money that you've deposited, and they do shit with it. They lend it out, they invest it, they do all kinds of shit, right?
Mm-hmm.
Well, Silicon Valley Bank invested $120 billion of their money into bonds. They did mortgage-backed securities, and they
Treasury
did
bonds.
and
yeah.
Treasury bonds. And at the time, they were doing it when bond yields and the interest rates were low, and they were essentially betting that that interest rates would stay low. But so they had their balance sheet is split into two
Well,
categories.
and they historically had.
Yes, exactly. For like 10 years. I mean, can you blame them? But so they had their balance sheet split into these two categories. AFS, which is available for sale, aka things that they buy and sell freely. And the way that those are accounted, it's called mark to market. So let's say that the price changes today and drops 10%. On their balance sheet, it gets recorded as such. Oh, this one dropped 10%. Boom, it's recorded that way, and it's like a stock basically. So they got they got those that they mark to market, and then they also had bought the longer term bonds. The majority of what they bought were these held to maturity bonds, which they expected to be held long term. So the distinction between those two is that the held to maturity bonds are marked at book value. They're not, even though their prices fluctuate, they're not marked to market on the balance sheet. So like the price could drop, but you know, as far as you know, they're just the same price, right?
Okay.
And like I said, 3/4 of their portfolio was in that, mostly in treasuries and mortgage-backed securities. It's normally pretty safe, except those kind of long-term bonds have what's called interest rate risk. They're not totally without their own risk.
Right, because when they started parking in those treasury bonds, what was the yield? 1.5%?
Something like that, like 1.75%. Yeah. So what happens when interest rates rise?
Now people are going to be able to go out and get bonds at a higher yield.
Exactly. So
Right.
what happens to the bonds that you're currently holding? Hey, everybody, I know you can go and get like 5% on bonds, but we have these bonds that are yielding like 1.5%. Do you want them?
Right.
Fuck no.
So, well, you could sell them just at a much cheaper.
Yeah, exactly.
Right. So
The price-
you're going to lose a lot of money.
you're going to lose a lot of money.
As the Fed starts raising interest rates, their investment is faring worse and worse.
Yeah, especially that available for sale part. Even though it's a smaller part of their portfolio, it started to get hammered. So they're stuck holding the bag, so to speak, on these bonds that yield less. And it was this terrible confluence of events because they're reliant on venture capital money continuing to flow in. But as interest rates started to rise, that venture capital money started to dry up.
Right. It's a real perfect storm.
Yes.
They're raising rates, which is making their investment worse,
Right.
worth less,
Yes.
which is also drying up the money. So they're taking a huge hit on deposits. I think they maxed out somewhere around 200 billion, and then month to month they're down to like 173 billion, 163 billion.
Yeah. So their clients are slowly starting to withdraw money because they needed it. And eventually, Silicon Valley Bank was forced to sell those AFS, the available for sale bonds, at a loss. And then in January, they also revealed in their filings that their longer-term securities had paper losses of $16 billion against their $11.5 billion in tangible equity. AKA, if they were to have to liquidate those longer-term securities, they'd be fucking bankrupt.
There's a hole.
Yeah, there's a massive hole. So around that time in January, when they had to liquidate these, the shorter-term, not shorter-term, but the available for sale stuff, you know, the rumors starting to spread that they've got a cash burn problem. The more money flowed out, the more that longer-term portfolio was at risk of needing to be liquidated.
The group chats are lighting up.
Oh, man, I'm sure. They're all just in between talking about whatever fucking fleece pullover they got. They're like, oh, did you hear about
Did you hear
Silicon
about
Valley
this?
Bank? Yeah.
I don't know about all this.
So the biggest red flag was the fact that they had incredibly insufficient risk strategies in place.
No.
Yeah. Can you believe it?
No.
In fact, they only hired a chief risk officer in January, and they were without a senior most risk officer for 8 months.
Yeah.
Out of the year last year. And of the 7 board members assigned to their risk committee, only 1 had a background even closely related to risk management.
Is that good?
No.
Oh.
No. You would think that with a portfolio of that size, they would have sizable hedges in place. I believe the amount of hedges that they had, I read, was only around $500 million. It was like that's like less than 0.5%.
Well, that's okay, because you figure what are their deposits? 173, $200 billion.
$500 million ought to cut it, don't you think?
That ought to do it.
That ought to do it, dude.
So going off of the confluence of events, you also had Silvergate was this other bank that had collapsed on March 8th. Silvergate was this middleman between institutions and crypto exchanges. So basically, if you're an institution and you want to invest in crypto, you funnel your money through Silvergate for whatever fucking reason. I don't know why they need to be the intermediary. I don't understand it. But so after FTX collapsed, customers were withdrawing their money from Silvergate, and they had to sell just over $5 billion in debt securities. They even went to the Federal Home Loan Bank for $4.3 billion. The Federal Home Loan Bank, for the uninitiated, is it's the bank that you go to. It's the bank that regional banks go to when they need cash. Elizabeth Warren criticized that move, and she pointed out, rightfully so, how the crypto market risk was coming into the traditional banking system. And in a nutshell, Silvergate couldn't handle the withdrawals because, you know, no bank actually has enough cash on hand to handle if everybody decides to pull their money out at once. So that led to them losing $1 billion in Q4. They went into receivership pretty quickly, meaning the government took over. And prior to their collapse, customers were moving their money to other crypto-friendly banks like Signature Bank of New York, which also just collapsed. But we'll get to that. So now let's go look at the timeline of events that happened last week. Where should we start? Wednesday?
I feel like you hit a lot of the timeline.
I mean, yeah, but then the actual timeline was such that... So Wednesday, last week, they put out a press... Silicon Valley Bank put out a press release stating that, okay, we sold the majority of our available for sale securities, and which was $21 billion worth of low yield U.S. Treasuries.
And how much were they losing on
And they realized a $1.8 billion loss. You know, all right.
And investors liked this. They felt good about it.
Investors were like, wow, okay, they're being honest and forthcoming. No, but
they didn't like that.
No, they did not like it. Hey, guys, we want to take a quick break to thank another sponsor of today's episode, MoneyGram. Hey, You know what, Emil? We live in a world that's more digital than ever.
I'd say that's fair.
I got a cassette deck in my car, but boy howdy if I don't use it, because I don't. Nearly everything you want or need is just a tap away, and so many of our favorite digital services seamlessly meet the physical world when they're delivered to your front door. But until now, that hasn't been true for our old friend crypto.
Digital currencies have been tied up online with no easy way to bring them into the real world. That's why we're so excited to share that you can now cash in and out of select digital wallets at participating MoneyGram locations without a bank, credit card, or debit card.
It's the best thing to happen to bread since slicing it.
Get the only digital wallets with real cash access activated by MoneyGram. Learn more at moneygram.com/stellarwallets.
All right. Well, because then Silicon Valley Bank also said, it was this very long press release that I poured over. It was like 50 pages or something. But they said that they were also raising $2.25 billion to, quote, strengthen our financial position, all right, and reposition their balance sheet to take advantage of higher short-term interest rates, to lock in funding costs, to protect interest income, and enhance profitability. Sounds nice, right?
Okay, what happened Thursday?
Well, but first, on the heels of the collapse of Silvergate Bank just a couple weeks prior, there was this venture capitalist-induced panic as they started to instruct their companies to move their money out of Silicon Valley Bank. Nobody wanted to panic, but also nobody wants to be the last guy in line at the bank to get their fucking money out. You
Right.
know?
It's also important to know Silicon Valley is different than other banks, right? We talked about how it's series people, VCs, startup guys bringing their money in. Most banks, and we're going to get to all the stuff with the FDIC and how your money's insured up to $250K.
Mm-hmm.
Most banks are somewhere between 40 and 60% of their funds are over the $250K threshold. So their
Right.
deposits, 40 to 60% of their deposits are not insured.
Mm-hmm.
Silicon Valley Bank was at like 91 to 95% of their deposits were uninsured.
Because they were over the 250,000 threshold.
And so that's where a lot of the stuff like you're talking about, these mortgages they offer, these checking accounts with privileges and everything, that's part of their service because they wanted people to they didn't want people spreading out their risk and putting it in other banks. They wanted everyone to be banking with Silicon Valley Bank and keeping all their money there.
Mm.
And so part of that panic is people going, well, Jesus Christ, I got a lot of fucking money in there over the 250,000 threshold.
Right. Yeah, and that presents a problem because when you're the bank, even though you got $120 billion worth of customer funds, if everybody tries to, it's not like they got $120 billion cash waiting, like, okay, yeah, if everybody wants to bail at once. Fuck no, they do not have that.
Yeah.
So anyway, on Thursday, the next day, the CEO of Silicon Valley Bank, Greg Becker, who, by the way, up until very recently served on the board of directors of the Federal Reserve Bank of San Francisco.
Yeah, we'll get to Greg Becker.
Ay. So he put out a statement trying to calm investors, but it fucking backfired when he literally told people to stay calm.
Nothing like keeping everyone calm by screaming, "Stay calm!
Stay calm
You
during
guys
a call."
are freaking out.
And on Thursday, the stock dropped a precipitous 60%. He also couldn't assure people that this would be the only capital raise they would need to do. And by the end of Thursday, $42 billion worth of deposits were withdrawn. Silicon Valley Bank had a negative cash balance of $958 million. And none other than Peter Thiel took to Twitter to tell people to take their money out. So he wasn't the first domino, but he was definitely the biggest.
There was a lot of people. Jason Calacanis. There was a lot of people just running, screaming, "Go get your money now!"
Jason Calacanis said that?
I'm pretty sure.
Yeah. I mean,
Bill
Ackman was crying about other.
They
things.
were all, Bill Ackman, David Sachs, Jason Calacanis. They were saying that people were going to have trouble making payroll, that they weren't going to be able to access their money, all this shit.
Right.
But Peter Thiel was explicitly telling everyone at the Founders Fund, "Get your money out of there now. Move it to other banks."
And when Peter Thiel talks, people do be listening because he's one of the biggest, baddest venture capitalists that there ever was. So his word holds sway, and it certainly did. I mean, as is evidenced by $42 billion worth of deposits getting withdrawn. And just like that, on Friday, Silicon Valley Bank collapsed. The second largest bank collapse in history, the 16th largest bank in the United States with a total of $210 billion in assets. And technically it was due to a liquidity crisis because not enough money was available to cover all of the outflows, but it was really due to poorly managed funds and having virtually no risk protocol in place.
Right. I mean, are you done with the time? Well, also, it's important to note. So on Friday, the federal government in California took the bank over.
Right.
Originally,
it worked real quick.
Originally trying to sell the bank to someone, couldn't get someone to take over the bank, and then they said that I think by Sunday evening they said everyone was going to be covered. They were using what's called the systemic exemption systemic risk exemption. Excuse me.
Mm-hmm.
Did you see that?
Yeah, that was incredible. Okay.
So the 250,000 threshold was not going to matter. If you were above that, depositors are going to be covered.
Right. Which is like good news, but it's also confusing because it kind of means like, okay, nothing means anything then. What's the point of even stating that?
Oh, it sets a pretty insane precedent.
Yeah.
There's basically no limit.
Right. Yeah. So I got to hand it to the federal government for stepping in. And apparently I learned that banks fail all the time, especially smaller banks, regional banks.
Yeah.
They fail all the time. So the government is adept at stepping in, taking over, and making sure things get handled appropriately.
But I also don't think they have quite the mess that someone like SVB made for themselves.
Yeah.
Right? And so a lot of people are talking about, well, is this a bailout? Yeah, it is a bailout. They're making all these people whole who were a bit irresponsible. And then, who's responsible? I mean, a lot of people are responsible for this. Greg Becker, CEO of Silicon Valley Bank, Silicon, doesn't matter. Silicon. There is, and I hate to always bring in the regulatory record on all these things, but it's the most frustrating thing in the world, right? So in 2015, Greg Becker started to lobby the federal government, right? Because in the wake of the financial crash, Dodd-Frank was passed, which put in a lot of new regulations for banks.
Right.
One of them was a certain threshold. When you hit a certain threshold of deposits at your bank, you have to be subject to an enhanced regulatory program, right? So you're going to
makes sense.
You're going to be subject to stress tests, certain liquidity requirements, all of these things, right? So Greg Becker was saying, we want to change that threshold. The threshold was $50 billion. When your deposits hit $50 billion, you have to start adhering to this.
I'm guessing he was bitching because it's going to cost them money.
Oh, 100%. He said, SVB's deep understanding of the markets it serves, our strong risk management practices. Becker argued that this bank would soon reach $50 billion in assets, which under the law would trigger enhanced prudential standards, including more stringent regulations, stress tests, and capital requirements for his and other similarly sized banks. Becker insisted that $250 billion was a more appropriate threshold. Without such changes, SVB likely will need to divert significant resources from providing financing to job-creating companies in the innovation economy to complying with enhanced prudential standards and other requirements. Boo fucking who.
Suck my dick, Greg Becker.
So this is him writing to Congress, who he reportedly sold $3.6 million of his own stock 2 weeks ago in the lead up to the bank's collapse. Oh, given the low risk profile of our activities and business model, such a result would stifle our ability to provide credit to our clients without any meaningful corresponding reduction in risk. Okay? So this is 2015.
So he's saying that all of these things wouldn't do shit for their risk management.
No, that's not what he's saying.
Well, no, that's what. Yeah, he's saying that these additional steps wouldn't enhance our risk.
He's saying we're already low risk. Don't make us do this because it's going to cost us money.
Exactly.
And what we do is we provide people a service so they can create jobs.
Right.
Get out of our fucking way.
Yeah.
Right? So that was 2015.
Who was in office then?
In 2015?
Yeah, Obama.
Obama.
Yeah, but then...
He's no like enemy of Wall Street, Obama. But it wasn't until 2018. In 2018, they were able to roll back these. It was.
Fuck yeah.
And it wasn't just Republicans. That's they fucking go hand. It was about 50 Republicans, 17 Democrats. They were able to pass this through and raise the threshold to $250 billion.
Hell
okay,
yeah,
so
brother.
5 times that. So now, not only do you have pretty sizable banks without this regulatory schedule, they're also, it's leading to consolidation because banks are going, fuck yeah, now we can get 5 times as big without having to hit this fucking regulatory program.
Fuck yeah, dude.
Pretty sick, huh?
Yeah, that's tight. Hey, gang, we want to take a quick break to thank another sponsor of today's episode. You know it, we know it, we all love it, Shopify. Shopify is the commerce platform revolutionizing millions of businesses worldwide.
Whether you're selling flaky salt or fine art prints, Shopify simplifies selling online and in person so you can focus on successfully growing your business. Shopify covers every sales channel, from an in-person POS system to an all-in-one e-commerce platform. It even lets you sell across social media marketplaces like TikTok, Facebook, and Instagram.
Packed with industry-leading tools ready to ignite your growth, Shopify gives you complete control over your business and your brand without having to learn any new skills in design or code. And thanks to 24/7 help and an extensive business course library, Shopify is there to support your success every step of the way.
What's incredible to me about Shopify is how no matter how big you want to grow, Shopify is there to empower you with the confidence and control to revolutionize your business and take it to the next level.
Now it's your turn to get serious about selling and try Shopify today. This is Possibility powered by Shopify. Sign up for a $1 per month trial period at shopify.com/Trill, all lowercase. Go to shopify.com/Trill to take your business to the next level today. Shopify.com/Trill.
And now, had they been subject to these things, Silicon Valley Bank would have probably been a bit more aware of what was going on.
Sure.
Right?
They probably would have had a chief risk officer in place.
Right. They probably wouldn't have gone a fucking year without a chief risk officer.
Yeah.
They probably would have had to hit certain liquidity requirements.
Mm-hmm.
Okay, this probably wouldn't have fucking happened.
Yeah. My favorite take on this was the Wall Street Journal's Andy Kessler had he blamed wokeism.
Of course, because
he said, in its proxy statement, this is a quote from Andy Kessler. In its proxy statement, Silicon Valley Bank notes that besides 91% of their board being independent and 45% women, they also have, quote, 1 black, 1 LGBTQ+, and 2 veterans. I'm not saying 12 white men would have avoided this mess, but the company may have been distracted by diversity demands.
Fucking psycho.
Dude, all right.
To just see a failing bank and go, you guys know how blacks, women, and veterans are stupid, right?
Yeah. I mean, geez Louise, buddy. Andy, Babu.
I love how
gotta...
he also says, I'm not saying, and it's like, no, you are, though.
Yeah. I'm not saying 12 white men would have avoided
We just saw you.
But the company... Who was the CEO?
Also, he lists 1 black guy, 1 queer person.
No, he lists 1 black.
Yeah, 1 black, 1 queer, 2 veterans.
Andy, God bless you, sir.
But that's the thing, but they need to do that. They need they need an easy thing to blame. They need a culture war thing, because what we really need is hard. They need to adhere to regulation. And
for all we know, the black and the queer were like, yo, we need a chief risk officer.
I mean, that's just never going to fucking happen, right? These guys go round and round. Like, yeah, in 2019, Becker was elected to serve on the board of directors at the Federal Reserve Bank of San Francisco. Left the board on Friday. I wonder why.
Jeez.
And they're all just fucking going around, and and we're going to see it keep happening. Our entire life has been a cycle of people just completely fucking up the economy.
Yeah.
And then going, I don't know, we'll be better. Sorry we blew through regulations, or there were none in place because we fucking went down to Congress and fucking cried so hard.
Listen, buddy.
It's just, it drives me nuts. Okay.
Yeah.
They're, Wall Street and big business, they're fucking babies, and they just want this, zero regulation, zero interest rate environment, so they can just make a mess of everything and take huge risks with everyone's money. And then when it goes wrong, they just go, I don't know, sorry, we want the government to help us, even though we told them to get the fuck out of our way.
Yeah.
And if you step in and have any kind of dissenting opinion, they try to make a fool out of you. And you just end up some like footnote in some documentary or book. You end up like Brooksley Born.
Who?
Brooksley Born. She worked for the CTFC. She basically tried to tell Larry Summers, Alan Greenspan, all them about the... exactly. Who?
Yeah.
She tried to tell everyone about the dangers of the derivative market leading up to the financial crash, and everyone was like, shut the fuck up, Brooksley Born.
Yeah.
And now she gets some like award no one knows about.
Well, you know, capitalism isn't without its flaws. It's just that we've only had, how many crises since in the last fucking 20 years? That seems normal. That seems par for the course. Yeah. No, there's a lot to be pissed off about here.
There is. And it's not just the regulatory schedule either, right? Like, these guys were risky with their money. It wasn't just the bank. Like, Greg Becker thought, who fucking cares if we don't have a chief risk officer for a year, right?
We're invested in the safest shit imaginable.
And it's not just them, right? All these companies were keeping their money in this bank way above the risk threshold.
Sure. Yeah.
And you know, there was an article on Forbes with just like an entire game plan of how you could how they could have mitigated this risk. If anyone, you know, you have companies like Roku, they had close to $500 million
in cash
in
that bank,
sitting in Silicon Valley Bank.
Yeah. Well, and you know what's funny is now all of this money flowing out of there has been a bit of contagion, because now a lot of people who bank with smaller regional banks have kind of panicked, and because a bunch of things have happened. Moody's, one of the three big credit rating agencies, cut its view on the entire banking system to negative from stable. They said, quote, "We have changed to negative from stable on our outlook on the U.S. banking system to reflect the rapid deterioration in the operating environment following deposit runs at Silicon Valley Bank, Silvergate Bank, and Signature Bank, and the failures of SVB and SNY." Moody's said, "Banks with substantial unrealized securities losses and with non-retail and uninsured U.S. depositors may still be more sensitive to depositor competition or ultimate flight, with adverse effects on funding, liquidity, earnings, and capital." So basically, all of these other small banks are at kind of equal risk. If everybody tries to run for the exits, these banks are going to fail because they don't have ample liquidity to cover enough. So this week, you saw there were multiple banks. There was... Jesus Christ. First Republic,
yep.
Western Alliance. There were a few others that their stocks were down. Their stocks were cut in half on Monday. It was amazing. You see these charts and they're just a waterfall. And guess who wins? Fucking JP Morgan, Bank of America.
Right.
They saw an inflow of, I think JP Morgan alone this week saw like $15 billion, probably way higher by now,
right,
of people coming in. So Jamie Dimon's jerking off in his private jet right now, celebrating.
Also, you know who was down? So we mentioned Dodd-Frank.
Mm-hmm.
The Frank in there is for Barney Frank, one of the authors of the bill.
Right.
Who was trying to regulate banks in the wake of the financial crash.
Mm-hmm.
He
give it to me.
Was on the board of Signature Bank.
Oh yeah, baby.
And you know what he was doing as well? He was down at Congress lobbying for Signature Bank to be free of the same regulations. We're not risky. We know what we're fucking doing.
Yeah. Oh yeah.
Get out of our fucking way.
Yeah, we know what we're doing, baby.
You got to cash out, baby.
And
there was a great article in Financial Times. The headline just Barney Frank. It just says Barney Frank. Well, I had to make money.
Oh, that's beautiful.
It really is beautiful.
God bless him.
They had to make money.
Yeah. Well, because guess what happened on Sunday? Signature Bank collapsed with $110 billion in assets. Got shut down Sunday after customers withdrew more than $10 billion in deposits on Friday due to fears of exposure to crypto. And guess what happened, man? In 2018, it really is poetic. So in 2018... as Signature Bank is leaning more and more into crypto, the CEO, Joseph DiPaolo, said, and I quote, "Blockchain technology is the future. scroll. It's up. It's up. There it is. In 2018, the CEO, Joseph DiPaolo, said, and I quote, "Blockchain technology is the future. You don't want to be caught short because in 5 years, a number of banks will not be around because of blockchain technology." And in 5 years, the very bank that this man ran is not around because of blockchain technology. It is unbelievable. Truly unbelievable.
The whole thing is truly unbelievable.
It really is. And this was the third biggest bank collapse in American history. 2 and 3 right after one another.
And these are just all our smartest, biggest brained guys.
Oh yeah, man.
You know, they're in charge of the economy. They've got it all figured out. Don't you fucking worry. Don't you fucking say a goddamn word about regulation. Also, a lot of these regulations, they would just save them from themselves.
Yeah.
It's just like,
that's the point.
Insane. You know, and you see people crying about it online. You know, well, what are you supposed to do if you have, you know, all this money? You're just supposed to spread it out to a bunch of banks and give them each $250,000. Yes, dude, that's the whole fucking point of it, to mitigate risk. So if your bank fails, you don't have all your money wrapped up in one bank.
Well, it is tough because what do you do if you've got like fucking $50 million?
Well, there's a lot of banks offer things, you know, companies manage this risk of bank failure through recognized insurance strategies. There are private sector solutions, IntraFi's insured cash sweep, which essentially cuts up large accounts into $250,000 pieces and splits them across banks participating in its network. CDAR is another IntraFi product. It's a less liquid option that segments cash into CDs. You know, there are also some cash management accounts with a sweep feature or additional insurance to take out. There's a Forbes story with like all of these. Also, presumably, if you're a bank or if you're a company that could afford to have $500 million in cash parked in a bank, you could afford to have a chief risk officer who could figure this out for you, right?
Sure.
A way to mitigate this risk.
I just don't understand if I'm going to be covered $250 at, let's say, 10 banks for $2.5 million total across 10 banks, and I'm going to be covered that way anyway, why not just cover me at one bank?
Did you not just hear what I said?
No, I did, but like still,
because
if the government is covered,
Ben,
what?
Because it mitigates everyone's risk. The government's saying you're covered up to $250K.
Right.
If you park $2.5 million into one bank and that bank fails, you're on the line for $2.5 million. If you park $250,000 in a bunch of banks and one bank fails, you're saying
it saves the government. It saves the government.
It saves everyone. They're the ones funding this FDIC fund, right?
You're smart, dude. That's smart.
But that's the problem. No one's like thinking about this. They're just going, I don't get it. Just let me leave it in one bank if you're going to cover it.
You should be in charge.
I don't want to fucking be in charge.
I think you should.
All you do, that's the thing. All you do is get kicked around by these people.
Yeah, these banks.
Anyone trying to do any kind of sensible regulation.
Yeah.
You get fucking kicked around. They tell you, "Oh, you're getting in the way of fucking job
Trying
creation.
to create a job.
I'm trying to create jobs, and you're trying to tell me I can't gamble with people's money
because it's going to cost me more money.
This fucking sucks."
Yeah.
And they scream and cry and bitch.
Yeah.
And they fucking pull your pants down on TV.
Yeah. And they point to your little dick and
they
say,
point to
Look
your
at
little
it.
dick. Look at this. This is what government regulation looks like.
Yeah. And it's
Look at his little silly penis.
Yeah. And it's Ted Cruz, and we're all like, we knew it was pathetic.
Ted Cruz does not want to regulate anything. Yeah. So it's not Ted Cruz.
Ted Cruz is smooth as a fucking Ken doll down there anyway. Hey guys, we want to take a quick break to thank one more sponsor of today's show, Public.com. Listen, if you've been getting crushed in the markets, did you know you could be earning a 5.3% yield on your cash when you purchase government-backed treasury bills? That's higher than your typical high-yield savings account. And unlike a traditional savings or high-yield savings account, the yield you get with treasury bills is a fixed rate. So you always know the rate you'll get when you purchase.
But the problem is that buying U.S. treasuries can be super complicated, or at least it was. Either to go to a bank or navigate a government website that looks like it was designed in 1996. This is where Public comes in.
Public just launched Treasury Accounts, a shiny new way for you to access the 5.3% yield of U.S. Treasuries directly on your phone with the flexibility of a bank account.
And because it's government-backed Treasury bills we're talking about, it's an incredibly safe place to park your cash. Public will even automatically reinvest your Treasury bills at maturity, so you don't have to do anything to continue growing your yield.
So you can now manage treasuries with stocks, ETFs, crypto, fine art, and collectibles all on Public. Go to public.com/Trill to start getting a 5.3% yield on your cash backed by the U.S. government. That's public.com/Trill.
But it's just, and I mean that, I'm sure not even only in the government, I'm sure there are people at these companies going, gee whiz, don't you think we should? And they go, shut the fuck up.
Yeah, get the fuck out of here.
Don't you like making money, you fucking loser?
Yeah. So there's So the collapse puts the Fed in a tricky position because the Fed's tightening cycle is now kind of on the brink of jeopardizing financial stability, as is evidenced by these banks failing, because it's pretty much a direct cause, But it's not the fault of the Fed. And still, data is showing that the current interest rates aren't restrictive enough to curb demand. So if that's the case, the Fed might have to choose between financial stability and inflation. And you could argue that they should prioritize inflation because any kind of financial instability might actually help with the inflation problem. So
wait, what was the thing you said to me? The saying the Fed raises rates till it breaks things or something?
I mean, I didn't say that, but yeah, the
you
Fed,
said that.
the Fed, yeah.
I can't believe you're doing this.
Put it on a bumper sticker.
You fucking said it to me.
But so now everybody's got to recalibrate their projections for rate hikes. It was 50 basis points, but now it's 25. And Nomura even said that they think that the Fed is going to pause given the recent news. But
wait,
holy shit!
You want a
what?
You want a metaphor that I do like because you won't go with me on that one?
Give me.
Okay, so this is from Nick Timmeros at the Wall Street Journal, the one
He's
who's always
the Fed whisperer.
Just always covering the Fed. You're going to like this.
Oh, give it to me, baby. I'm ready.
The Fed raises rates to fight inflation by slowing the economy through tighter financial conditions, such as higher borrowing costs, lower stock prices, and a stronger dollar. That curb demand. But the effects of those actions don't show up right away and can be akin to getting ketchup out of a glass bottle. Smacking the bottle repeatedly leads to no results, and then too much of the condiment pours out.
Ooh, man.
You like that?
Everybody knows you got to tap that shit on the neck. That's how you get the ketchup out.
But everyone knows that, like...
Yeah. And then all of a sudden...
Great, the whole fucking bottle came out.
Yeah, god damn. That's pretty good, Nick Timmeros.
So that's what the Fed's doing right now.
Yeah.
Tapping the bottle. Come on, baby. Whoop.
Tap.
Whoop.
Too much ketchup.
Ruined a couple bags.
Whoops. So yeah, like I said, the Treasury said on Sunday that it, well, I didn't say this part, I said Moody's, but then the Treasury also said on Sunday that it sees some institutions with issues similar to Silicon Valley Bank, and investors worried that customers were going to worry and pull their funds and move them to big banks. Also, the Federal Home Loan Bank, like I pointed out, was a key source of cash for regional banks, raised $88 billion in bond sales, which freaked out the market even more because it meant that the banks may require funding to back up deposits in anticipation of all these withdrawals. So then, like I said, you had a bunch of other banks' stocks tanking. First Republic went down 60%, Western Alliance went down over 50%, Wintrust, PacWest. It was just a mess of a week, and it's still shaking out. Like, First Republic then bounced over 100%. And did I trade it? Fuck yeah, you better believe I traded it. But then it's down like 30% as of us recording right now. But then there were rumors that, what's the bank that's CS?
Credit Suisse?
No, the other one. Fucking City. God damn it. I don't know. There was a bank that was rumored this morning to be making an offer to take over First Republic, but as of right now, it's still so unknown. Like because these things have kind of resolved. The Silicon Valley Bank and Signature Bank thing has resolved quickly. It kind of, a lot of people are being like, "Well, it's over, that's it." But it's like, no, there still might be some other things that need to shake out.
They're wheeling Joe Biden out to reassure everyone. Nothing gives me more confidence than our just necrotic, decaying president, who is a direct metaphor for the American empire. Just kind of everyone settle down.
Yeah,
the American economy is strong.
Yeah,
Jesus.
I'm pissed
Christ.
off because I have some put options on Signature Bank. I have the June 80 strike put option on Signature. I'm owed like $22,000, and it's just frozen, and nobody seems to have an answer for me for what's going to happen.
I got an answer for you.
Thank you, Charlie Munger. So I'm pretty pissed off because the stock just doesn't trade anymore. It's just technically worth like zero. And I'm talking to my broker and I'm like, hey, so I have these options. And he's like, yeah, well, there's not really an answer right now about what to do. And it's like, well, that's not fair.
Well, that's not fair.
The other party to those options wrote those options.
Yeah.
And it's like, oh, they get to just get away scot-free? Like, well, thank God. The company doesn't even exist anymore. So, whew, thank God. Like, get the fuck out of here. That's not how it works. The Options Clearing Corporation is guaranteed. They better fucking fix this or I will raise hell. And you know I've got the clout in the finance world to make waves, ripples.
Is that true?
Droplets.
Droplets.
What's smaller than a droplet?
Particle.
I can't do shit, but I have the luxury of time that they don't expire until fucking June, but still.
I'm sure it'll work itself out by then. And if it's not, it won't matter because everything's probably belly up anyway.
Yeah.
If it's not worked out by June, we're in trouble.
Yeah.
Well, so where are we now? Everyone's trying to keep an eye on everything and make sure this doesn't.
Yeah, and the Biden, like you said,
completely tank everything. They also, so the Fed introduced this BTFP, the Bank Term Funding Program.
When did they do this week?
In the wake of all this.
Got it.
So among measures to counter fallout from the failure, the Federal Reserve said it would create a new lending program for banks, the Bank Term Funding Program. The facility will allow banks to take advances from the Fed for up to a year by pledging treasuries, mortgage-backed bonds, and other debt as collateral. By allowing banks to pledge their bonds, they can meet customer withdrawals without having to sell their bonds at a loss, which is what Silicon Valley Bank did last week, sparking a run on the bank.
So they'd put their own declining assets up as collateral?
Right.
Okay.
But the weird thing about it is they don't have to take any losses on it. They kind of just freeze them.
Well, because if you hold the bond to maturity, you're not going to lose anything. You're going to get the yield regardless.
Yeah.
So, all right. I like that. But it was funny. You were right. They did wheel out Biden, and he reassured the public this weekend that their money was safe and that the system is fine. Did you worry at all? I didn't at all. I didn't give it a second thought.
Oh, just before we will get to that, I just want to make sure. So people are kind of confused about the bailout aspect of it, and everyone's saying it's not taxpayer money. But I guess with this, so if the banks can't repay all the advances in a year's time, the Treasury Department is providing a $25 billion credit. $25 billion of credit protection to the Fed just in case. The Federal Reserve does not anticipate that it will be necessary to draw on these backstop funds, but so it is being backstopped. The taxpayer may be on the hook if they can't get this under control.
Well, what's one more thing for us to be on the hook about at this point, right?
Right. What is it? Privatized gains, socialized losses?
There you go. That's exactly what it is.
Sorry, what were you asking me about?
I don't know.
Oh, was I worried about it?
Oh, yeah. Were you worried about it?
I mean, I had the loveliest weekend.
You were too busy watching tennis.
I couldn't be more unbothered.
Right.
I didn't want to be.
Good answer.
We were truly. I got there Thursday evening, and we had been invited to a private country club for tennis. So we played 3 hours of tennis. Then we woke up the next day, went back to the country club. 8 a.m, we're playing tennis. Then we went straight to the games. And then Saturday, woke up, went back to the country club, back to the games.
Wow. Okay. Well, anyway.
Truly just a fantastic weekend.
That's great.
And just knowing that in the background, just Silicon Valley tech guys are freaking out. That's just bonus for me. You know what I mean?
Pretty cool.
I'm just there at the buffet, scooping more on my plate. You know what I mean?
Yeah. More beans.
More beans for me, please.
For tennis boy. Shit. I forgot what I was gonna say about this thing and about Biden and stuff, but I think we've covered just about everything there is to cover. We can get into
other. Do you
think
we've covered it all?
Yeah. Can we scroll down? There was more that we had. Oh yeah. Oh well, the China being a better broker for world peace was the thing when you mentioned the decline and decaying of American imperialism. I saw this interesting piece that I shared with you. This Harvard professor Stephen Walt commented on China's Saudi-Iran deal.
Wow, hard transition.
Kinda. It's just to him, this is China picking up the mantle of being, quote, a force for peace in the world, which the U.S. has largely abandoned in recent years.
How dare you, Stephen?
Yeah, fucker. Listen, you ever heard of peace through force? Forcing people to be... But it is an interesting take on it, which is that China... basically wants to just be left alone and leave everybody alone, and because of their increasingly looming position as the world leader in terms of GDP, at least, they might be the ones to eventually take over and set the example that America has long since lost sight of. To be like America, who are you fooling anymore? Who are we fooling?
Tons of people.
Yeah, exactly. Well, but like the smart ones.
There are tons of people in America who they think every time we get involved in another country, they're like, this is good and we're promoting peace.
We're good in democracy.
We're the good ones.
Yeah. No, we had
to topple that democratically elected government.
Yeah.
You saw them. They might have, they were thinking about doing land reforms.
Yeah. Did you see the president of El Salvador just gave a really riveting speech to his own parliament or whatever? Excuse me, I don't know, but he basically just said, like, we are not going to be told what to do. We are our own sovereign nation, and we want to be left alone and do our own thing. It's like, fuck yeah. Yeah. We have fucked up so many countries.
Wow, what a
so
novel idea.
Yeah,
letting a country have some autonomy to run their own government.
And I wonder if this kind of thing with China and Iran is going to serve as a wake-up call for America that, like, hey, you can't be on top for forever. And
I mean, I think it's almost, you're talking about China moving into being the world power. I think we're certainly going to see a multipolar world where it's just where there's not just one.
Where there's snow everywhere.
Where there's not just one superpower who controls everything, and this is part of that, right? Yeah. And I'm sure the U.S. is very worried about that. For a long time, they were the only game in town.
Yeah. And
now they're like, well, shit, you're supposed to come to us, and we're going to give you, a terrible deal through the World Bank and IMF, and then we're going to own you forever.
Yeah.
And you're going to have to service this debt. And then when you default on it, we come in and fuck all your shit up.
Yeah. And we actually helped bring China out of the position that they were in, the poor position that they were in decades ago. And it's kind of poetic to see the protege, the student, becomes the master.
I don't know if I would put it that way.
Really?
That we
didn't we give a bunch of shit to China?
for a long time, it's like what we do. We just shun them. I mean, we wouldn't even recognize mainland China as a country. We recognized Chiang Kai-shek in Taiwan, or what was known as Formosa, I guess.
Mm-hmm. But we didn't because China was a communist
because of Mao. Yeah, and it wasn't until Nixon who started going over there and normalizing relations.
Right.
But I mean, that's that's insane. It's like if we normalized relationships with Cuba and be like, well, we fixed it for you.
Yes. Yeah. Yeah. But part of normalizing relations was opening up trade.
Sure, yeah.
And which was a major, major boom.
But I don't think it's fair to be like student becomes.
Well, of course. But I'm just using a bad example of because that would be, I'm going to keep it because that is, let's keep it.
No, it doesn't work.
Yeah, but it's more poetic that way. Don't you want it to be poetic?
No, it's also weirdly.
All right, I retract it.
This weird paternalistic relationship with other countries where it's like.
But we do that to everybody. And it's a problem. And we got to stop. Maybe China will be the one to finally give us world peace. Who knows?
Yeah, but it also takes a lot away from, the Chinese government, and they were look. I don't know why you're putting me in a weird position where I have to defend the fucking CCP and be like, I mean, they were able to bring a lot of people out of poverty, but
we're not defending.
I'm simultaneously saying that I'm not going to give the U.S. government that.
I think
the credit for that. I'm also not going to be like, the CCP is strong.
Yeah, I think the conclusion is that pretty much all the world powers are innately, intrinsically bad, and shit's fucked. God, this.
God, we did such a good episode. Now you're just like devolving to like shit's. You're like a high school or college freshman in his dorm. Like shit's just fucked up,
fucked
dude.
up, man. You know what? Here's some good news. AMC Apes can rejoice.
There we go.
At least there's some good news.
There we go. Wow, tell me what happened.
They voted overwhelmingly in favor of a 10-for-1 reverse split, and the CEO Adam Aaron, whatever, tweeted, "Today was a huge step forward for AMC. You voted yes, yes, and yes, and it was a landslide vote too. 88% yes for proposal 1, 87% yes for proposal 2, and 87% yes for proposal 3. My sincerest thanks for giving AMC the tools we need to continue fighting the good fight on your behalf." Man, what a fucking con artist shyster. It's going to enable AMC to further dilute the apes. That's it.
So what did they? It was 10-1.
So basically, for every 10 shares you've got now, you only have one, and the price is multiplied currently. Whatever the price is currently, or at the time of the split, will be multiplied by 10.
But so this is not so much of a split, more of a consolidation.
Yeah, a reverse split is done.
A reverse split.
A reverse split is done when
a banana split.
Yes, thank you. Is done when a stock is in the shitter, and it's on the brink of getting delisted. Also, when a stock reaches a certain dollar amount, some institutions just have a hard and fast rule against investing in it. So it's done to make it more attractive and make it look more respectable because, buying a $40 stock is better than buying a fucking $4 stock.
Interesting.
But it also enables the company to then sell shares still. And that's probably what they're going to do.
Because a normal split has
a forward split, the other kind, is when a stock is too big and then you got to make it more attractive.
Which also makes it more attractive.
Yeah.
Yeah.
Yeah. You want to be in a stock that's doing a forward split, not a
reverse split.
Yeah.
But the apes like this.
I don't even know. I haven't looked on the subreddit, but I'm sure that they are doing all kinds of mental gymnastics.
Well, they've become, they're a bit like Q-ish, right? So when Q gets something wrong, they can spin it. No, this is a good thing.
Yeah,
like,
or this is actually
all part
of
Q's
the
plan.
Yeah.
So
it's the same.
It's a very, I think the apes have that mindset where nothing is bad news.
Yeah.
Oh, it's down to 0? All part of the plan, baby.
Yeah.
Cheaper to get in. We'll get some new guys in here.
It's just funny that this guy is so good at. He's kind of like become the snake charmer,
the Pied Piper,
so to speak. He's saying thanks for continuing to fight the good fight, or like you're giving us the tools. It's like, dude, oh man, just no shame in this guy. What's the follow-up tweet down below?
Oh
yeah.
Shit.
Oh,
we're fucked.
Saving AMC is my. So it's really funny. Just listen. Saving AMC is my professional mission. And remember that I own millions of AMC shares and ape units too. I very much want AMC to succeed. I am absolutely and passionately convinced that what you have approved today is in the best interests of AMC and all of our shareholders. Yeah. I mean, he's not wrong. Saving AMC is his mission, and he's going to have to do whatever it takes to get there. And that's going to involve selling shares to raise cash because they need fucking money to continue doing what they're doing. So what happens now? We cannot implement what you approved today until the litigation in Delaware court is resolved. The next court hearing on this matter is set for April 27th.
Huge third tweet.
Yeah, so.
Way to bury the lead.
Babu.
Also, our hands are pretty much tied until we can clear some of this litigation stuff in Delaware, right into the Chancery Court of Delaware. If you want to see that cleared up ASAP.
Ay, man, these poor apes, dude. I saw a piece out of either the GameStop subreddit or maybe AMC talking about the MOASS, and I couldn't tell if it was a joke post.
I'm trying to get MOASS, if you know what I'm saying.
Oh yeah, Dougie. It's just saying that I don't care. I'm either going to hold to 0 or they always say that. I'm either going to hold to 0 or be a fucking multi-billionaire. I'm pretty sure that by now it's going to be hold to 0.
I think
that it's pretty well established.
You have to say they are right.
They are right. They are going to hold to 0.
They are either going to hold to 0.
They are going to hold to 0. Ay.
He's not wrong when he says, I'm either going to.
Yeah, or Yeah. What else have we got?
It's just heavily weighed in one.
There's got to be one more little thing.
Should we talk about
China.
the OpenAI thing?
OpenAI.
No, we'll save it because there's big.
Yeah, we'll save it, but Jesus Christ.
Jesus Christ.
Jesus Christ is my Lord and Savior.
Jesus Christ
does me a favor. Jesus Christ will forgive my sins and take me to heaven with him.
Is that real?
Nope, just made it up. Off the dome.
Really like that song.
Yeah.
A friend of Jesus is a friend of mine.
Yep, that's right. Jesus Christ. We love him. We celebrate him every day. Can't wait for his
This is a Christian finance podcast. We don't mention that a lot.
It is the number one Christian finance podcast.
The number one Christian finance podcast.
You find me another one, and or your money back.
But there might be some Christian finance podcasts where they're like, the best thing you can do is donate your money.
Donate.
Because that comes back tenfold, baby. The yield on that is unbelievable.
Yeah, you know what the best yield out there is?
Paradise.
No. God's love. God's love pays an infinite amount of yield.
I mean, when
you could go find 6% here, you could find 10% there, but only Jesus' love gives you all the yield that you need in your heart. So give to us, and we'll donate, we'll
You got it.
Yeah.
He just breaks character.
Yeah.
They've been doing it for like 10 years, so he just like falls out of the preacher voice. You folks will find it.
You find the link on the website and donate all that you can.
It does appear that my private plane is leaving, so I do have to go.
Well, that about wraps it up for this
Does it,
episode. Yeah, I think so. That wraps it up.
That wrapped it up.
Yeah, we're gonna end there.
Hang on. They're saying that wrapped it up.
Yeah, they're saying they're giving us the old hook.
Yeah. I'm hearing breaking right now that wrapped it up.
To all of our new subscribers out there, if you made it this far, we'd like to say, what the fuck?
So you're sick.
But also welcome.
And I want you to get help.
Yeah.
I want you guys to get help if you're still here. Every one of you still watching.
Sick. If anything that I said about China upsets you, I'm sorry.
Yeah, he got real weird with the China.
Listen, I don't.
Got real weird with the China stuff. What the hell was
it's
that?
fucking first thing in the morning, folks. I don't know what's going on here. I don't know what to think anymore about anything. So please forgive.
Ben gets weird about China.
Oh man, China. I love that food though, man. You can't stop me when it comes to that orange chicken. Oh, baby. And those rails that they build, they do it so fast, and those trains go so fast, and I do appreciate it. Anyway,
you do have to give it to him.
I got to give him props. I do.
They put up rails like it's nobody's biz.
Yeah. I wish they'd make it mine. So stick around for After Hours. We're going to be talking about how we scammed a restaurant to let us in, and what else are we going to cover?
Fun.
I'm going to talk some shit on. I'm going to talk some shit about Ryan Reynolds. You know?
Oh yeah, we got to talk about Rai.
We're going to talk some shit.
And we can tell him about the Ryan Reynolds joke from Japan.
Oh yeah. No, you got it.
We'll do it.
You got to hold on.
Yeah,
we're going to save it. TMGstudios.tv, where you want to go and sign up and subscribe. Otherwise, thank you so much for listening, and we'll see you next week. This week on After Hours.
Were you just looking at my penis?
No, I was looking at your mic wiggling around.
You were looking at my penis.
Now I'm looking at your penis. God, I can just see the outline. The bisexuals are going bananas right now. Another theory was that the pilot did a suicide thing.
That kind of makes sense with the other one where it's like, okay, fine.
Then what do you do with all those people? At that point, why not just say, yeah, we're the United States? You're going to do that
270 people? Hold on, you're next. I basically was like, look, I'm not playing this game. And he said, it's all right. You're just a kid. I said, don't put your fucking hands on me. That was the scariest thing I ever heard.
Fucker.
Sign up on tmgstudios.tv to watch the full bonus episode.